Here's a chart of the Dow Jones average in New York during last night's session. It opened stronger on the back of the €100 billion bailout of Spain's banks, but it didn't take long for the doubts to start. Will it be enough to save the banks? Will saving the banks save the Spanish government anyway? And should we be worrying about Italy now, not Spain? In fact, European markets generally fell, even in Madrid. And Spanish 10-year bond yields, which were supposed to fall after the bailout restored confidence in Madrid's solvency, actually went up last night, not down. Stocks on Wall Street finished more than 1% lower, and markets across Asia went down as well, although not quite as much as Wall Street. The Australian All Ordinaries Index, though, closed 0.2% higher, basically because all the banks went up. Resources stocks all lost ground. Qantas shares surged 10% as investors suddenly switched onto the notion that it's now a takeover target. Qantas executives have appointed an investment bank to help with its defence and are now crouched behind sandbags with tin hats on, waiting tensely for the siege to begin. Other beaten-up stocks also attracted some interest today, BlueScope and David Jones among them. The Australian dollar slipped a bit, but the euro slipped a bit more. Actually, the Aussie dollar got above parity yesterday, but only for a minute or two before sinking back below 99. A bit of economic news out today. The monthly business survey from NAB, conditions and confidence both well down. Here's a graph of business conditions, and things are now as bad as they've been for 3 years for Australian firms. It's a good thing the economy is going so well. On the other hand, lending is up, especially for businesses. That's economics for you. And that's finance.